All right, traders, I'm going to show you exactly how to profit day trading the SPY heading into tomorrow. This is going to prepare you to trade the best setups at the best prices possible. In our latest video, I'd explained to you on how I had strong interest in buying put options on the SPY if we can approach that key $410.97 level, as I was anticipating for the SPY to have a micro gap close reversal, meaning it fills this gap and it starts to reverse. So SPY didn't hit 410.97. However, it nearly filled. As you could see right here in the pre-market, it formed some resistance at 409.65, very, very close to that gap fill level, and it began to drop. Then as soon as it retested the pre-market highs, you had a very strong bearish confirmation, which was a reason to short towards that gap, towards that nice keyhole around 410 level with that bearish confirmation with the lower highs turning previous support into resistance, right? So I'm going to prepare you to trade the best setups at the best prices. I'm going to be showing you the new key levels to be shorting the SPY. I am super bearish heading into tomorrow based off the daily chart. We have people within Trader Society who not only bought puts in the 409s today, but they also decided to swing trade puts. And I'm going to be explaining to you on why, I'm overall bearish for tomorrow. But one thing to keep note of and one thing to be aware of is, if we are at a very key level on the daily where SPY is overbought, you can play partial gap close reversals. Just know it's not the best thing to do. The best thing to do is to go with, the best level possible, which is where the gap is waiting to fill at 410.97. However, in terms of exceptions, and if you do have a larger account, and if you want to do the second best thing, it's not the best, what you can do is you can get in at a very close level where the gap partially fills and then it has a reversal, because that does occur, and you can do it off a pre-market high rejection. So write that down. If you see it topping out towards the gap, very close to filling the gap in the pre-market, and then it has a sell-off or it opened, then it has a nice little sell-off, a nice little drop, like this went from 408 to nearly 410 in the pre-market, so a nice little drop. If it retests that, forms a double top and has bearish confirmations, then yeah, sure, go ahead and take it. You can play the partial gap close reversals, but I would only do a partial gap close reversal if there's a strong rejection, a nice overreaction, and then, short the double top after bearish confirmation. But I would only do it as well if it's at a key gap, meaning it's at a very high gap. It's at a very high gap towards resistance, right? So if it's at a lower gap towards the middle of the channel on the daily, then I wouldn't really do it. But if it's towards major resistance, towards the high end of the channel, then I would do it, right? So those are some things that I want you to keep note of and be aware of. Now, heading into tomorrow, where do we stand, right? So the reason why I'm bearish is SPY nearly filled the gap and it rejected and it started selling off. And it ended up closing green to red, right? So those are the main reasons why I'm bearish. This candlestick right here, to me, this doesn't look bullish at all. It looks like SPY filled the gap. It's overextended. It formed a bearish candlestick. This does not look bullish. You can see a very similar candlestick formed right here. Nearly identical towards key resistance. It started dropping. The same candlestick formed right here. The next day it had a small gap down, started dropping a little bit, right? Overall, when SPY seems to form that candlestick at key resistance on the daily chart, it tends to have a micro sell-off. So I do believe we are going to see more micro downside heading into tomorrow, right? So with that being said, how can we determine that the bears are going to be in control? One way to determine is if we do gap down. And as you can see, we are currently gapping down. SPY is currently at $406.18. It closed at 407.36. So if we do gap down, that's going to confirm the super bearish thesis. More reasons why I'm bearish. If you take a look at the 30-minute chart here, you had very key support. This is very important to keep in mind, heading into tomorrow. Just look at these 30-minute candles. There's not a lot of support. Once Powell gave a speech, there was just a massive micro rally. This is what I want to bring awareness to in terms of your key support on the 30-minute chart. A lot of that support is really towards this previous closing price right here. It's towards this 407.30 and this 405 level, we'll call it. This is your overall support zones. This key support with nice downside potential to 405 reacted as a resistance level. SPY nearly bottomed at my target. In terms of the targets that I gave out for the SPY yesterday, I told you guys the first target would be 409 if you get it on puts. And then I told you guys, since it's a great setup at a great price, I would aim for a second target as well. Normally, I just sell at the first target, but in best setup situations, I will look to aim for the second target with some of my size, not full size. And that second target was under 406, and it nearly bottomed under that. It actually went to 404.75. But yeah, that was good price action overall and a great trade in general. But previous support in the pre-market with nice upside potential cracked. It then reacted as a resistance, This support cracked, reacted as a resistance, Now it's selling back off and it's gapping down. Bearish on the daily, partial gap close reversal, all reasons to be bearish. So heading in tomorrow, what I want you to be aware of is this zone. So 407.38, where the SPY closed. There's going to be a gap to fill there tomorrow. If it does gap down, right now it's gapping down. That would be the new best level for put options, 407.38. If that reacts as a resistance, we will see a retest to 404.77. If 404.77 cracks and reacts as a resistance level, we will see a push to about $402, right? So this is what I want you to be aware of in terms of entries and in terms of targets. The best entry is at 407.38. That is your best entry if you see a rejection and bearish confirmation. The price targets, the first target would be right here at $405. The second target would be right here at $402. Those are your two targets. Look to take, some off towards the first target, and then you could leave some on to ride for the second target with expectation of giving back profit. Worst case scenario, do not go green to red on that. Now, what I want you to understand in terms of bull theory is, if it can break above the previous closing price, 407.38, and if it can turn for the bulls to truly gain some control for the micro, they need to push above 408. Turn that into support. If that can occur, then 410.97 would be the best price for puts, right? So that's the game plan. I'm short biased. I'm put focused on the two best levels. The first one is going to be the previous closing price, 407.38, which would be the previous closing price, once tomorrow hits. And the second level is going to be, say that reacts as support. It's looking bullish. You get stopped out, or maybe you didn't go with puts because it was bullish, whatever the case may be. 410.97 gap, right? So the 407.38 gap right now, if that reacts bullish, then we wait or get stopped out, whether you're in the trade, and then we get in at that 410.97 with heavier size because it's a better level. Those are my two key levels. The overall price target would be at 402. If it cracks 402, it goes to 400, and we should see some sort of bounce at 400 if it hits 400 tomorrow. That's my overall thoughts. That's my overall thesis. This looks overall bearish. So again, just to quickly recap things, go back and watch yesterday's video. It ended up having a partial gap close reversal. I don't recommend playing partial gap close reversals unless there is an overreaction to the downside, which there was in the pre-market or at market open, meaning it partially fills the gap, has a nice pullback, and then it rips back up. And if you see bearish confirmation, play the double top. But you have to combine that with daily resistance. In order to do that, say you do get that overreaction and double top retest, you don't want to play a partial unless it's at a major resistance level on the daily, which it was. This was at major resistance on the daily. SPY was up 14% from the closing low price on this day. And the highest it's been up this year from its, bottom micro rally that we discussed in yesterday's video was like 17.50% from the closing price. So it was due for some sort of pullback. It was approaching the gap. The initial reaction, we were expecting a reversal and a bearish confirmation because it made pure sense. It was due for a micro sell-off and call options were just up too much. So the gap up to nearly fill the gap was the gifts for the short, especially with this very nice overreaction to the downside with a double top with a bearish confirmation. Save this candlestick. In terms of confirmations, I'm using the 1 minute chart. I'm trading the daily chart as well. So in terms of where we stand right now, it's having a partial gap close reversal. It's gapping down. It's bearish on the daily. It doesn't look bullish. It's turning key support in the pre-market into resistance. It closed red. So 407.38 is the best price for puts. If it stays under 407.38, we're going to push to 405. If it cracks 405 and reacts as a resistance, then we're going to go to 402. If 407 to 408 reacts as bullish support and it breaks out, bulls take control if 408 breaks out, then wait till 410.97 for puts. Utilize that information on how you want to. I gave you the best levels. 407.38 would be the ideal best level. If that reacts bullish, then wait till 410.97. Those are your two best levels heading into tomorrow. If this does gap down, I do think it is going to be unlikely to see the gap fill. So what would be a lower entry that you can look to go with in terms of puts, where if you wanted to take a starter entry to play another partial gap close reversal. And I would only recommend doing this if you have a smaller account and you're scaling in. So say you want to put in $1,000 into the trade, well, put in $500 and then add the other $500. If you get a bearish reaction and get squeezed, if it fills the gap, right, you'd be down. But if you average in and you scale in, then you wouldn't be down as much and you could let the trade play out a little bit more. You have to do this. If you have to scale in, if you're going with lower prices and playing partial gap close reversals. So if you're not playing at the 407.38 level, then what I would say is, 400 and 400 and 680. 406.80 would be a decent level. 406.80 to 406.50 as well. If we crack 405, we go to 402. If 402 cracks, we go to 400. And just remember, if you see bounces, if you see bullish confirmations, that means it's going to try to re-go back up to level. So example, if 405 cracks and it drops to 402, 402 reacts bullish, it's going to try to rip back to 405, right? So you know the risk involved in continuing to hold it. You know where it's going to be heading if you continue to hold, right? So play the two targets. That's what I wanted to share with you. That's the overall analysis. Trader Society is going to be relaunched and reopened up soon by the end of December. So stay tuned for that. Make sure to subscribe to the channel to stay up to date with that announcement. We're going to absolutely crush it within the chat room tomorrow. Congratulations for those of you who played put options today. Yesterday's video was on point, and this video should be on point as well, as we are in a bearish process of a partial gap close reversal.